Hey everybody, this is Jim at sp500chart.com. It is Sunday afternoon, and we're going to look at the S&P 500 with our weekly review, and also take a look at what took place in the markets on the 19th of July. But before we do that, I got to read this to you, and that is that www.sp500chart.com and this video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. We're going to start out by looking at a 3-day chart. And the reason is pretty simple. I just want us to see where we are in relation to a couple of pretty long-standing trend lines. We're going to get rid of this one. And I want to show you a couple of other things too, but we're going to do this fairly briefly. We have had this a trend line that so far has 3 touches, starting way back in March 9 of 2009. It didn't get tagged again until winter. Well, no, actually fall. I always think of November as being winter for some reason. I don't know why that is. Maybe it's because it starts to get cold. But no, the low was actually, I believe it was October 3rd of 2011. We tagged this line again in mid-fall of 2012. And we're well above this line as we sit today. There's another line, this red line, which kind of has a tag back here in 2009, again in 2010, traded underneath this line in October, in the fall of 2011, but have bounced on it twice since. So this support line right here, even though it broke once, does have some technical significance. We're keeping it on the chart. If we also draw a line across the first 2 market tops that were in place after we hit this low, you'll see that it makes a line that is very close to being parallel to this right here. I find that kind of interesting. Let's see if the S&P has the steam to get up to tag this line, which it very well may have. It'll be interesting to see if we form a top of some type at that point. The other thing I want us to see is that since the 3909 bottom, there have been a series of rallies that have resulted in a top. Here was our first big one. Took more than 2 years. Here we go. Boom. Even though we had that flash crash sell-off in May of 2010, it found bottom and made a new high. I'm drawing, since this was our first really significant data point for a low after the absolute low of 2009. And I say absolute because so far that's been the low that we've experienced over the past 5 years. So anyway, we break this, come down, make another rising channel, break down, another rising channel, break down, another rising channel, and this channel is broken down. Okay, even though we are setting a series of new highs in the S&P and in the markets in general, here is that rising line, and you can see it broke, and now we are moving up to the right and underneath this line. Same thing is here. It broke at around 1440 or so, but then it came down, found bottom, and started a new rising channel below and to the right of this line. Same thing happened back here. So just because this broke does not mean, and just because a rising channel breaks does not mean it's a major reversal. Oftentimes it's a little intermediate break of trend that leads to a new high being set. And I believe that's really clear in this chart. And we are more than likely in the process of doing the very same thing right here, as we are now above that previous intraday 1687 high in the S&P. Now let's zoom into the chart. Now that we kind of have this in a little bit broader perspective. And again, this blue line is that important rising line off of the 3.9 bottom, and then the July 2009 low. Let me back out just to make sure I'm saying that right. No, I am not. It is the rising line off the 3.9 low, and then the 10.11 low. Not this low. Spoke out of turn there. But I still think this is a very important line. This line is the one that has the tag on that summer, late July, or rather late June, early July low in the summer of 2010. So let's zoom back in. These two lines certainly need to be watched. We're not really that close to them right now. Matter of fact, we're fairly far away, but still, it's rising at a pretty good clip. And with that in mind, at some point, we're going to tag this line again, and eventually, we will break it. We just don't know when yet. But when it breaks, then that's when we have to more than likely start looking at if this is signifying a major change in trend. Zooming in a bit. We talked about how the S&P has been in this rising channel defined between these two turquoise lines, and we are kind of inching our way towards the bottom line this past week, and we're not that far from it. So if we go sideways for a little bit more, we will hit this line at some point in the coming week. If not, possibly even on Monday. So this definitely, I think, bears watching. So we've got, it's just a real interesting chart right now. We have this nice move up on Thursday that looks like it's maybe entering a consolidation phase here that lasted about a day and 2/3. And then on Friday, we actually broke out over this top line. So that would seem to imply that there could be some renewed strength right out of the gate on Monday. But as you know, the market doesn't like to make things easy. We also stopped right at another trend line that may serve to bolster the bearish case, and that is this purple line right here, which is our extended neckline from our last Head and Shoulders top. So we take this line, extend it out, and we closed right at that line. So none of this makes it easy. But what does help us, sometimes when we're looking at these patterns and all these trend lines extended all over creation, I think what we probably should do, and is what we've been talking about really for all week long, and that is, let's just watch this channel. As long, and it goes without saying, as long as we stay in this channel defined by here and here, nobody needs to do a thing if you're long. because you're in a rising channel that came off of a 1562-ish low, was it? I'm going by memory on that low. Yeah, but well, actually about 1560. May have actually, yeah, about 1560 and change low. And now here we find ourselves 130 points higher within just a few weeks. And all defined by movements within this channel. When this breaks down here, we are likely going to be setting up a move to come down, and I would think at least test this line down here in the 16, what is currently in the 16 teens. We could get picked up in the mid 1650s by this line right here, but I don't think this line is as important as this one. So this one probably wouldn't be too difficult to take this one out, given how far the market has come without a real meaningful correction so far. So let's watch this channel coming into the week starting July 22nd. If we look at the week in general, trying to kind of grade ourselves, we came into the week with this channel in mind, and we also had been inside a more rapidly rising red channel right here, but we knew we were coming up to this neckline, that and coupled with this smaller channel inside the red channel, this little blue guy right here. When we started the week, we knew to kind of be watching this lower line here to see if it would break, and if it did, we would expect an eventual test of this lower support line. What was a little surprising was we did not come down and test that support immediately, which I thought would be a fairly typical action. Instead, we have moved pretty much sideways with a little bit of an upwards bias, and resulting in a week where we had very modest gains overall. So the one thing I think we looked at that was kind of interesting too was we saw this pattern develop on Tuesday after we broke down out of both of these channels on early Tuesday. We saw this little pattern develop here, and it was a bit ambiguous, and the possibility was this is a bear flag, which would lead to that back test, or it was a small inverted head and shoulders, which would lead to a rally. Turned out to be that small inverted head and shoulders. And guys, I'll be honest with you, when you have these really small patterns, they're virtually untradeable, because to begin with, the targets from them are minuscule. In this case, it was about 0.25%. So for that reason, and I think going forward, let's just stick with the channel. When this breaks, then we will know to expect a few days of selling, and if we start to break through some significant or even some minor support levels, then we'll know that a few days could turn into a week or a week and a half. All of that could be a very manageable and a good thing, because the market, probably could stand to take a breather, having come off, I said, of about a 130-point rise that has taken place outside of any meaningful decline. And again, I want to remind you too that we were considering that this might have been an inverse head and shoulders pattern here, but we never made a right shoulder. And I'll remind you too that if that pattern had completed and really satisfied the requirements for calling an invert and at calling it an inverted head and shoulders pattern, we would be looking at a target of about 1753, 1754. And it could be that we are still, that this pattern just had a premature breakout. So is that 1753, 1754 still on the table? Well, if we stay inside this guy right here and we keep tooling on up, that goes without saying, it is. But if we break this rising channel right here and then come down, excuse me, and get a bounce on this, what was a proposed neckline, if that were to happen, then I would think that would be a good sign that we probably would look for that 1753, 1754 level, but that it would not happen in the immediate future, that we would probably see that take place sometime in August. But, excuse me, all of that aside, just going back to what makes sense for looking at the next week, this line right here, I think, is the thing to watch. If this breaks, then this rally, this channel will have broken, and we would be looking to come back to find some support. And I believe it will either be found at that neckline level, or if that breaks, then it will be found at this orange line down in the lower 1600s. So guys, that's your video for the week ending July 19th. Thank you for your time. Thank you for your support. And take care.